Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the sterling versus US dollar as the Fed decision gets closer and closer. That rate decision will take place at 2 p.m. ET, and if we take a look at the sterling versus US dollar, the price is moving up toward new session highs as we speak. The price initially in the Asian session moved lower, but then started its rotation back to the upside. That move to the upside is approaching the 38.2% retracement. That's of the move down from the or up from the, I should say, from the end of June low to the July high right here. That 38.2 comes in at 129.31. Above that level is a 200-hour moving average. That's a green line in this chart at 1.29478. Going through the FOMC rate decision, moving above each of those levels would increase the bullish bias for this currency pair, and then have traders looking toward this swing area right here, where we had a number of swing highs through here, and then we found support against this area right here before breaking to the upside on the move to the downside. We fell below not only the 200-hour moving average here, but also used this area as resistance here, and had one sniff right here before the market rotated to the downside through here. So getting above the 200-hour moving average would have traders looking toward this swing area, move above that level, and opens up the door for further upside momentum, targeting this area through here, which outlines the or is the area before the extreme that saw the price move up through here. So this is the extreme, and this is the interim, what was once support, then became resistance before moving to the downside. So those are the that's the progress to the upside in the sterling versus US dollar if the dollar should get weaker after the FOMC rate decision. Now, on the downside, the 50% retracement of this same move to the upside from this low to this high right here comes in at the 128.66 level, and just below that level is a 100-hour moving average. So guess what? If the price were to move to the downside and break below that area, we'd have traders thinking in terms of a lower bias or a more bearish bias in this pair. If it were to then go below this trend line, which connects a low here to a low here to more lows through here, that level comes in near the 128, looks like 28 level. Right below that level, then we start to look toward the 61.8% retracement on the downside, and move below that level opens up all the doors for further downside potential. Increases the bearish bias, just as an obvious viewpoint from a technical perspective, and should lead to lower levels in that currency pair. So the levels are in play, or the levels are defined. The levels will help to tell the story through the FOMC rate decision. It's up to what the Fed chair says, what the Federal Reserve does, and we'll see how it all plays out. But be aware, be prepared, and you'll be okay. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.